What's up everybody? Welcome to the Stocks channel. My name is Cory and today we had another low volatile choppy day in the market with a mixed bag across the indices. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so looking at SPY, we see we did go up 0.05% today, and yet again we see SPY getting rejected at that critical resistance level right at 420. Now looking at the price action closes, we're still closing above all the moving averages and we still have the benefit of that full bull trend now. So the trend is on the side of the bulls, which is going to help push the price action higher. However, you have to remember you don't want to look ahead and the price action is still struggling to break above 420. Now the bears are running out of time, or they're just straight up not showing up to the party because we don't see any big volume selling. We still see low volume down here and we still have that low volume sort of melt up situation going on where SPY is just chopping around and trying to build up a bullish trend to push through resistance. So if SPY does break above 420, look above for the next price targets at 423. If we break above 423, we're likely going up to about 429 to 430. But remember, I always keep saying don't look ahead at the upside price targets. We need to get a price action close above 420 to validate those levels. Right now, SPY failing to break above 420 could also be a warning sign that we're about to see another leg lower. So don't forget to watch the critical support level right around that 20 simple moving average at 416. Even in a bullish scenario, we're likely due for a pullback and it would look something like coming down to that 20 simple to find support, bouncing and trying to make another attempt to break above 420. In this situation, you're still going to see a little bit of a pullback here, but the question is going to be whether or not the support level at 416 holds up or if the price slices right through it and continues to head lower. So if we do see the price action getting below that support level at 416, that's going to start looking like SPY is rolling over. Remember that we still have a lower high situation and we have yet to form a new all-time high. So right now we're bullish in the short term and we definitely have a bullish trend, but that doesn't go without any risk. In the longer SPY fails to break above 420, increases the probability that we could come back down to retest the support level first. So watch that critical resistance level at 420, and if we do start to see any selling, watch critical support at 416 and 412. Remember, if we start breaking below 416, we could come back down to close the gap at 400. On the NASDAQ 100 triple Qs, we see the price action going down 0.37% today, and again, we keep failing to break above that critical resistance at 334.6. We've tested that level for 3 days in a row now, and we see the price continuing to get rejected from that level, and we continue to try to come back down to the support level around 332.5. Now the triple Qs have a different look because even though we do have a full bull trend, it also looks like that 20 simple moving average is trying to cross back below the 50 EMA. So on the triple Qs, the price action needs to start going up soon to get this 20 simple moving average to curl back to a positive slope and start pushing the price higher. Remember, the 20 simple moving average is a momentum indication, and right now in the triple Qs, we still have downward momentum with a negative sloping 20 simple moving average. So the critical upside resistance on the triple Qs is 334.6. And if we break above that level, you're looking for 336.9 and 339 as possible price targets. The critical downside support is going to be right at the 50 EMA, which is also where that 20 simple moving average is, right around 328. If the triple Qs start breaking below 328, it's very likely we're coming all the way back down to about 308. And remember, we are getting into a weaker area of the market going into the middle of June. So it's possible if we do start rolling over and closing below critical support, we will see a pickup in momentum to the downside and will more than likely see volume increasing on selling days. So remember, failing to break above this critical level is a warning sign because it could mean that we're going to see another leg lower to finish out this correction. On the Dow Jones, we went up 0.39% today and we did close some of that gap above. That gap will close around 337.6, and we have critical resistance at 348 and the previous all-time high at 350. Critical downside support is right around 342.6, which is where that 20 simple moving average is. The Dow Jones does have a bull trend, and the price action is trading above all the moving averages. If we break down below the 20 simple moving average, look for possible support at the 50 EMA, which is right around 337. And if we fail to hold above that support, look for the gap close at 331.6. On the Russell 2000, we went up over 1% today, and the Russell 2000 is starting to see some follow through with that bullish day we had yesterday. We did open a gap below that won't close until we get to about 223.8. We are starting to build up a bullish trend, and the price action is back to trading above all the moving averages. Look for upside resistance at 227 and the breakout level right around 228.5. Critical downside support is going to be right at 221. And if we break below 221, we could be going back into a bear trend and retesting support at 215. On the Arkk ETF, we went up about 0.75% today, and we are getting very close to that 112 resistance level. We did see the 5 EMA and the 13 EMA cross back above the 20 simple moving average, but we still have a negative sloping 20 simple moving average, and the price action is still trading below the 50 EMA. So if Arkk can break back above about 112.6, look for a retest of the 50 EMA right around 115.6. Remember that Arkk is still bearish until it gets back above the 50 EMA and starts getting a bullish trend building up. So right now, this is still just a bounce off support in a bear market, and it is possible Arkk could find resistance and start reversing back down to retest that support at 97. Look for downside support levels at 109, 106, and if 106 fails, we're likely retesting support at 97. On the VIX, we dropped over 3.5% today, and the VIX is continuing to show that fear is leaving this market, which is a bullish indication. However, the VIX did get into another support level right around 16.65, and it is possible off any of these support levels, we could see a bounce. Right now, it does look like volatility is leaving the market, which in the grand scheme of things is a bullish indication. Even if we do see a volatility spike from here, we still are well below 18.2 and that $20 resistance level. Remember, the VIX needs to get over 20 to signal a deeper stock market correction. Even if we see a VIX spike in the 18 to 19s, that's just a normal pullback and it's nothing to worry about. It's not until the VIX gets over 20 and we see deep selling that we need to worry about a deeper correction. So right now in the bigger picture, the market does look bullish, even if we are due for a short-term pullback to finish out this correction. In the bigger picture, the market still looks healthy and it still looks like it does want to go higher. On gold, we were pretty flat on the day as we continue to build up that bullish trend to push to the next price target at 1923. Look for downside support at 1891 and 1876. If 1876 fails, look for a bounce off the 20 simple moving average at 1845. On silver, we had a little bit of a bullish day today, closing back above the 5 EMA, and we still see silver in a strong bull trend. Look for silver to try to break back out above 28 and try to run up to the next price target at $29. On Bitcoin, we're currently down about 0.78%, and we do see Bitcoin continuing to struggle around that resistance level at $39,000. Bitcoin still has a full bear trend and it's struggling to break above this $39,000 resistance level. If Bitcoin can hold above this level, look for a retest of 43,000, and above that, we'll be looking for resistance at 47,000. Downside support levels are going to be $30,000 and $27,000. On Amazon stock, we dropped over 1% today and we're back to closing below all of the moving averages. Amazon will have critical support at 3209 and 3138. But also note that Amazon is starting to build up a bearish trend, and the longer it trades below all of the moving averages, the more likely it's going to pick up bearish momentum. So we need to see Amazon try to bounce back off of one of these support levels and get back above about 3262. We have critical resistance above right there, right around 3260, and the breakout level we're waiting for is still right around 3340. On Tesla stock, we were up 1.89% today, and we did see Tesla closing above that 20 simple moving average and above resistance at 626. Look for Tesla to possibly retest the 50 EMA next, which is right around $653. Don't forget, Tesla is still bearish as long as it's below the 50 EMA and it doesn't have the benefit of a bullish trend just yet. Also note, looking at a 5-minute chart, that Tesla did jump from 619 all the way up to about 630 in the last 10 minutes of the market. This is more than likely just an algo pushing Tesla higher into the close, and it's not necessarily a move that I would trust. So even though we did close above resistance, you can definitely see some shenanigans in the last 10 minutes of the market. On Apple stock, we dropped about 1.24% today, and Apple is still struggling to close above that critical resistance level at 128. You could see Apple is below all of the moving averages, and it is in a full bear trend, and it does look like Apple is going to start heading lower. It closed below support at 126, and it looks like it wants to come back down and retest 123. If 123 fails, look for possible support at 119. Remember that Apple is very weak until it gets back above 128. So this is not a good sign for the rest of the market because Apple is a market moving stock and it's in a full bear trend and it continues to make lower lows and lower highs. So if Apple does break below 123, look out below and the rest of the stock market could be coming down lower with Apple. On the financial sector, we went up over 1% today, and the financial sector is still closing over the 5 EMA and still holding on to a bullish trend. Overall, this is good news for the S&P 500. On the industrials, we also had a bullish day today, gapping up and closing above the 5 EMA and trying to build back up a bullish trend. The healthcare sector dropped 0.22% today and closed back below that 20 simple moving average, but it still has a bullish trend. The healthcare sector needs to bounce soon to try to go back into that bull market. The energy sector was up 0.08% today, but it did close below the moving averages yet again. We're still above the 50 EMA, but we're losing the bullish trend, and if we do break below support, we could be coming back down to retest the 50 EMA. So going back to the S&P 500, you can definitely see some of the sectors are looking like they're rolling over and they're starting to look weaker. However, we still have a low VIX, which means low fear. And overall, this is still a bull market, and it does look like the market does want to try to continue to push higher. Right now, we're dealing with a low volatility chop zone, and it is possible we still need a pullback before the market can build up energy to push higher. Remember, there's a lot of cash on the sidelines, but we just don't see it being deployed just yet. We more than likely need to see a pullback from these levels, a retest of critical support, and if those support levels do hold up, that will be a bullish indication that we're likely going to push to new all-time highs. But right now, the risk still remains as long as SPY is below 420 and the triple Qs are below 334.6. If you don't know why that's a risk, you need to watch the weekend video, and I go over exactly why those are critical resistance levels that you need to pay close attention to. So right now, we see those resistance levels holding up, which is definitely a warning sign. But overall, we're definitely seeing some bullish developments building up in the market. So watch the volume and watch the volatility very closely, and watch the critical resistance and the critical support. Also remember, on the Stocks Channel Discord, I'm giving intraday updates and analysis to help you navigate this market and stay on the right side of the trade. I'm bringing new trade ideas to you weekly to help you crush this market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.